Recently on the Retirement Answer Man podcast, we answered a question related to the rules around inherited IRAs. Well, over the last few years, they've gotten really complicated, so we thought we'd create a resource to walk through the rules as we understand them. So I'm going to walk through a mind map that we created about inherited IRA rules. If you want a copy of this mind map, you can go to rogerwhitney.com and free resources to download your own. So let's take a look at it. So first off, obviously, we are not your advisor, and this is Helpful Hints in Education. And when you are dealing with inherited IRA rules, if you're at all confused, we encourage you to hire an expert. So, inherited IRA rules. Let's start with what RBG age means. That is required beginning date for the original owner in terms of required minimum distributions, because this becomes important when we're looking at inheriting an account from the original owner. So this is the RBG date, is the date that the original owner of an IRA has to start taking required minimum distributions from their pre-tax account. And this has gotten a lot more confusing over the last few years. If you were born before June 30th, 1949, your required beginning date for those distributions is 70 and a half. Now that used to be the same thing for all of us, but the IRS has changed that and has been increasing that date for the beginning of distributions from an IRA. For someone that's born July 1st, 1949 through December 31st, 1950, the RBG date or beginning date for required minimum distributions is actually 72. And then someone born in the decade, essentially the 50s, 1951 to 1959, their required beginning date for those distributions is age 73. And then if you're born in 1960 or after, it is 75. So depending on the original owner of the IRA and whether or not they're making required minimum distributions will impact the inherited IRA rules. And that's why we're going over this. Last little bit I want to hit on here. If somebody has hit their RBG date and is taking required minimum distributions in the year that they pass, the original owner, if the required minimum distribution hasn't been taken, it still needs to be taken by the end of the year. So that's important to remember. So now that we have an understanding of the required beginning date for RMDs of the original owner, let's go to what happens if you inherit an IRA. And these are the rules for anybody that inherits an IRA on or after January 1st, 2020. Prior to that, we know what the rules are. That's operating well, but it got a lot more confusing as a result of changes in the tax code. So the first question you need to answer to know what rules apply to you if you have inherited an IRA is whether you're an eligible designated beneficiary, a designated beneficiary, or a non-individual option. We're going to avoid those for this discussion because the majority of people that inherit an IRA are going to be in one of these two categories. So let's look at the first one, the eligible designated beneficiary. Who qualifies for that? Well, that is going to be, let me close that. That is either going to be the spouse or a non-spouse that fits one of these categories. A minor child of the original account owner of the IRA, someone that's chronically ill or permanently disabled, and there are definitions around that if you think you might qualify, you'd want to go do some more research, or someone that is not more than 10 years younger than the original owner of the IRA. So that's going to be considered an eligible beneficiary, designated beneficiary, EBD. You can see how this gets complicated. So let's start with the spouse. Let's go ahead and focus there. A spouse, once we know who their option, now we need to understand whether required minimum distributions have started or not to determine what the rules are that would apply to a spouse and what options they have. So assuming that the original account owner, the deceased spouse in this instance, passed away before their required beginning date, the spouse has the following options. Number one is they can transfer this just directly to their IRA, or they can establish a new IRA to receive this and just treat it like their own money and avoid all of this craziness in terms of rules. This is actually what happens in my experience about 99% of the time. But the spouse also has other options that they might want to be aware of. Number one is they could open an inherited IRA with the life expectancy method. So what does that mean? Well, that's a little bit like the older rules. Required minimum distributions would be mandatory in the year in which the decedent would have attained age 73. So if the person that died was 72, and a spouse established an inherited IRA under this method, once the decedent, if I can say that right, had reached age 73, then they would do required minimum distributions based on a life expectancy. So that would be one option. The next option is the spouse could open up an inherited IRA using what's called the 10-year rule method. And until further IRS guidance, because this is very unclear, that means that the inheritor, in this case the spouse, opening up an account in this category, would have 10 years from the date of death or the year end of date of death to empty the entire account, but they wouldn't have to take money in between that. Or they could just simply take a lump sum. So that would be the rules for someone that inherited, a spouse that inherited an IRA before required minimum distributions occurred. Now what happens, let's get out of focus there, and let's go to a focus here. What happens if the spouse that died after they were taking required minimum distributions? Well, again, the spouse could transfer this to the IRA, which is going to happen probably 99% of the time, or they could open an inherited IRA with life expectancy method. And again, you must take an annual required minimum distribution over your life expectancy beginning no later than the year after the death. Or they could take a lump sum. So that is what a spouse has for an option for as inherited designated beneficiary of an IRA. Now, what about these other categories? We'll just look at this briefly. The only one I really want to point out is, again, you have to decide whether it's before or after required minimum distributions. If it's before required minimum distributions, you open an inherited account over the life expectancy, which is more of the normal way that we think of it. They could open an account and use the 10-year rule method, which means that until IRS gives us more guidance, they have 10 years to empty the account, but they don't have any obligations in between. Or they could take a lump sum method. Now, one caveat here on this is that if it is let me go back out here. If it is a minor child that's inheriting the account, they can use the life expectancy method until they turn age 21, is our understanding. And then at age 21, they have 10 years from that date to empty the account. So they go from the normal life expectancy method to a 10-year rule once they reach age 21. And then what if they have already started required minimum distributions? Well, they can open an inherited IRA with life expectancy, and then RMDs must start in the year after the year of death. And again, the minor has that switch, or they can take a lump sum. So that is the eligible designated beneficiaries. But what about everybody else? What about someone that doesn't fall under that category, a designated beneficiary? That's going to be anybody that's not a spouse, that's not terminally ill, not disabled, not a minor, or not within 10 years of, or less than 10 years younger than the person that passed. So this might be an adult independent child that inherits an account from a parent where there's a bigger spread than 10 years, which would make sense, right? Well, these rules are going to be, and this is going to be the majority of us that probably inherit account if you're not a spouse. Well, again, we have to decide, well, one, did the original account holder already start the required minimum distributions or not? Did they reach that age? If not, the account holder has until more IRS, that should say IRS guidance, not IRA guidance. They must empty the IRA by the end of the year of the 10th year after the owner dies. So if the owner dies in 2024, they have in 2025 is the next year, they have 10 years from that date to empty the account, but they don't have to take any money in between unless the IRS comes back and gives us more qualifications. But what if the owner died after they were required to take required minimum distributions. In that case, you will be required to continue to take required minimum distributions during the 10-year period and must empty the account by December 31st of the 10th year after the year in which the holder died. Now, the IRS just recently came out, and this is where it came up in the podcast, is for those that were not taking that required minimum distribution for this category, the IRS has been waiving the penalties in years 1, 2, 3, and now the 4th year in a row because they've been very unclear in their guidance. But assuming they get the guidance out starting in 2025, then if you don't take that required minimum distribution because you inherited an account as a designated beneficiary from an original owner that was already taking required minimum distributions, you could have some surcharges and penalties. So you can see how this gets complicated. So that is our current understanding of the inherited IRA rules. This is a great starting point to follow the tree as to where do you fall within the qualifications so you can follow these rules correctly, so you can do better planning on how you want to take withdrawals within that 10-year period if that applies to you, and whether or not you need to be taking required minimum distributions because of the status the original owner was in terms of the required beginning date. I need a nap after this. Hopefully that was helpful. If you want a copy of this mind map, you can go to rogerwhitney.com and we'll have that in our free resource section.